Hello and welcome to another Impact Insights. I'm delighted to have with me today Julian Sampson from TWM Solicitors. Hi, Julian.
Hi, morning, Dale.
Now, we've dealt with you for a long time. I've known you for a long time personally. For those who don't know who you are, can you just give us an idea of your role and what your sort of day-to-day consists of, please?
Yeah, of course. So I'm a partner here at TWM. So TWM is a mid-sized firm, sited mainly in London and the South East, with our HQ here in Guildford, so not too far from you guys at Impact. Yeah. I've been working in the, we can now call it specialist lending, but it's gone through a number of phases, hasn't it, over the last 20 years. But that's all I've done from start to finish, is just working with lenders, brokers, and sort of quirky variations of a theme but with always with lending at its sort of very core. So and sort of seeing the market ebb flow over that period, people coming and going, just as you have, Dale. So that is all I do. You ask about sort of what I'm up to on a day-to-day basis. I mean, the great thing that we have now here at TWM and have had for about 18-24 months is an exclusive lending department. So it has been totally carved out of the traditional residential or commercial property departments, and we look after lenders and their borrowers and intermediaries, which means that we get to play around in the market and understand a little bit in greater depth, because we're entirely focused on it, what really affects our lenders and our borrowers, and then hopefully can lead markets and establish new products and into new areas for everyone's benefit, really. But as a normal day, it's pretty much the same as every other, hopefully, lending law on the planet. So, focus is always principally on getting completions done. So I lead a fairly extensive specialised team. So they work with a panel of lenders who might be buy-to-let, they might be residential, they might be bridging, they might be development, or we might work with lenders to lenders. So people that are providing funds into lenders, or buying massive portfolios from those guys. And our role is essentially to get things closed as soon as possible, and that tends to be the first point of attack of the day for the team and myself. But thereafter, it's about always looking at moving and improving the service, efficiency in process, the use of IT, and I kid you not, and I'm sure the same for you guys, it's a daily mission, because feedback from a borrower, a broker, a lender always enables you to tweak something. It's not always about high value digital and tech, but it is sometimes about simply getting something out at a different time than you would normally do. And one of the challenges that I have is you do have a lot of legacy in 20 years. So learning how to change what you do to match the market or to match feedback is really important, and that happens pretty much every day. And we're always talking to our lenders about new products, and again, that's not far off every day. In fact, this morning we've had feedback requests from one of our key lenders who have asked us to talk to them about completions process, how they can improve their completions process, and not our completions process, but how they go and deal with other solicitors. And again, that's a daily request and a daily engagement we do. And it's really, really important that we improve our lender panel as much as we improve ourselves. Hopefully we do it in concert. So there is some fluidity between, dealing with you guys at Impact, to dealing with our completions, to dealing with a lender, so that the borrower's experience and ultimately your broker's experience should be relatively seamless. Never works out, but it's the way it should be.
So you mentioned there that obviously tech and lenders is a good part of your business at the moment, and that's definitely a part of our business. What are the lenders bringing to you to actually make the process quicker with regards to the property transaction? Because at the moment, everyone seems to be concentrating on the front end, and then once the mortgage offer is out, it sometimes hits a brick wall, and it can sit, the completion process can take weeks or months to get sorted. So what are you seeing from your side to help speed that transaction up?
Yeah, I mean, it's it is a bit lumpy, Dale, at the moment with how lenders deal with the back end, and part of that is our responsibility as solicitors, because there are a lot of us out there, not all of us either technically advanced or necessarily technologically advanced. And the lender, for their sins, has, if they want to deal with an open panel, then they have to work with the lowest common denominator, and that might be a solicitor firm who have a couple of partners in a high street, and Zoom was a really significant change for them. So moving into electronic signatures and APIs is something that is so far off their path to be years down the line, and that means the lenders, in order to enable them to complete for their client, for the borrower client, have got to work off the slowest part of that. So there are, however, certain things that you can force, and some lenders are forcing lawyers to do. So electronic certificates of title. So we've moved obviously from post to fax to email, and now we're doing embedded forms too for a lot of lenders. So that works reasonably well. There are electronic signatures of mortgage deeds afoot. We completed the UK's first ever electronically witnessed mortgage about 3 weeks ago now for a bridging lender. It takes a little bit to set up, but it is definitely coming. And with the early pilots with like the Coventry Building Society of the last 2 years, that is something to keep an eye on. But I think speed comes from relationships and comfort that you're getting the right sort of engagement from your solicitor partners. And that happens with everything. There is a rhythm to what we all do, and that's why you create relationships with brokers and packagers and distributors and lenders and valuers, because you build up a rhythm, and that rhythm actually creates major efficiencies, just because you can read each other and understand where you can then move and progress and improve. And that's really not a technological advance, but technology flows from that, and you can then again have comfort and confidence in the technology that your partners are bringing to the table. So we have, for example, just launched a service we call iQuery, which is essentially where we raise questions of borrower solicitors if we're acting solely for the lender, and we do it in a fully online platform, which enables the borrower solicitor to respond within the platform, but everyone to see what and how it's being responded, and there's a full audit trail within it. And it's technologically not massively advanced, but it is a very different way of doing things from what we see our compatriots doing. And we are in a fortunate position with our lender partners to be able to force a few of these things through. So look, we're going to do this, and we really suggest that you come on board with us on this. And they close their eyes, cross their fingers, hope it's going to go well, and ultimately it does. And then suddenly everyone realizes they don't know how they did without it. So, but that comes with confidence and relationships. And I think that has always been key in all my time working with this and with you guys, Dale. So, I think
absolutely
you advance together. You'd absolutely advance together.
Well, it's all about relationship and communication, isn't it? And with that in mind, surely we find sometimes, especially on the bridging side and the short-term lending side, that someone has got a family solicitor that's been their legal representative for years and years and years. Of course, they can do everything until they get onto the bridging side or a specialist HMO. And then, of course, it goes to pot because they don't really understand the difference between dealing with those type of transactions compared to a normal residential, straightforward remortgage with Nationwide, for example. And that causes immense problems from our side.
I think it does. But again, that's about having, as a solicitor partner, our role is to accept that happens. So separate representation exists. I mean, bridging development, it kind of has to exist. So there's very little way you can get around that. It's going to be there. But with term lenders, it exists because firms don't necessarily fit appropriate criteria for lenders, or a lender is so specialist as not to be on a firm's radar until the borrower asks. So what we take that responsibility really seriously with what we do, because you do have solicitors on the side who are frankly worried and afraid about acting for a borrower on bridging. They've never done it before, and they just panic. Or alternatively, you do get some volume conveyancers, and we come across an awful lot where the case handler doesn't know what a mortgage deed is, for example, and you think, well, that's a relatively fundamental point to what we're trying to do here. But rather than sort of critique it, our role is really to push the matter through and to guide them, or push them to make to the horse to drink the water. I mean, it's really important that we have seen a complex HMO before, or we have seen on a weekly basis complex portfolio incorporations, stamp duty applications. We see it day in, day out, and it's not the solicitor's fault that they haven't, but it is our role not to say, go and do this and let them flounder. Our role is to say, go and do this with your client, and you might like to think about doing it this way. Or alternatively, how's about we take some of the heavy lifting off you and do it this way? So, for example, on HMOs is a really obvious one. There are little hints and tips that we give to solicitors about how to deal with late licensing or planning applications for either C4 HMOs or large HMOs that the borrower hasn't even hit their radar. And yet we've managed to build process and systems in place that our lenders accept, that we can share with these guys. So look, this is how we do it. This is the documentation we'd use for. And we're not so proprietorial that we won't share that. And if we've got to share as a Word document, they go on and use it in the future, then good luck to everybody, really. But at least we get the job done. And I think that's becoming really important. So we can't stop other solicitors being used, neither should we. But what we can do is just help them get the job done, because there are some absolutely awful firms in play, but there are some good ones who just don't have the experience, and that's not their fault. They're probably much better at doing a nationwide mortgage than I am.
Yeah, and what's your views? I mean, that's a really good point. What's your views on like dual representation, where the lender has one solicitor to act for them and also for the clients?
I think it's very dangerous with bridging and development. So I know that some lenders have enabled their panel firms to do it, but I do think it's very dangerous. Principally, from our perspective, we think there's a regulatory block on that, and I'm sure everyone's done their homework, but we can't get our head around it. So for me, that is an inherent problem. And then there are, I think, especially with bridging and development, some really distinct conflict issues, both in the way you go about closing a deal for the client and decisions that have to be made. Because no matter what anyone says, no matter how much a lender refuses to accept it, there is a negotiation that goes on. And if you are a robust lawyer and you can afford to push back, then you. There are some things that from experience you can't, but there are some things that the market suggests you can. So I think that becomes an issue. But where we act for lenders to lenders, we have seen an awful lot of cases where things come unstuck during the life of the loan.
Yeah.
And you see it probably. And this is the thing with solicitors who do conveyancing don't often see the back end. I mean, the real back end when we come to exit or more probably recovery at the current moment. But you see it because the borrowers are coming to you to say, can you negotiate with our existing lender for an extension? Can you bridge us out? Can you do a bridge to bridge? Can we do a bridge to let? Whatever it may be. So you see it and I see it, and the conveyancing solicitors often don't see it. And there are some real issues that crop up. And I think if you are a careful solicitor, you will, if you saw what coming through, you would sit there and go, did I really advise my borrower client properly at this stage? Because it seems to be it seems to unwinding right now. Could I have said something or done something differently, or frankly, stepped away? And I think we as a profession have to be sometimes really careful. When things are going really well, it's brilliant. You pile on, and you make hay while the sun shines, and it's all wonderful. Yeah. But you can't forget that in specialist lending, at the moment there's always ever been, as you know, Dale, a finite number of people that do it, both as lawyers, as valuers, as lenders, and as intermediaries. And if you get it wrong, then memories are long, and we've got to be really, really careful about that, and about our relationship with others in the market, but also about our reputation. And reputations are very, very easily.
Yeah, that's the key part at the moment, isn't it? Reputation. And obviously, during lockdown too, we're very grateful that valuers can still go out to value properties, and therefore the transactions can still proceed. But from the legal side, we're also seeing now a number of people come out, a number of lenders come out and saying they're going to accept title insurance. So for those who don't know, what is title insurance, and how is this helping speed up the end transaction?
So there are two types of title insurance. I mean, there is one that I guess we all know and see when we buy a house, which is defective title and indemnity insurance. And that tends to be a specific insurance policy for a specific. So by way of example, I have stuck a conservatory in my back garden. I didn't get building regulation consent for it. The sticking plaster for that is to get a specific policy to say that the buildings inspector ever came round and told me off for it, that the insurance policy would step in and cover costs. It doesn't deal with health, safety, or the fact that my conservatory was put up by a shocking builder, but it covers the legal risk that flows from having to remedial action. So that is something we probably are all familiar of. We may not know about it, but people punt that around quite a lot. Now, what's happening, and we're seeing with a few lenders, is accepting title insurance broadly. So title insurance in its broader sense is an all-risk policy. The idea being that it cuts legal underwriting in half, so that we as lawyers are specifically required not to look at certain things and not to investigate certain things, because if we do, then it impacts the title insurance coverage. So, for example, I might not be required to look at the lease. I might be required to look at how long the lease is, but I might not be required to look and see if there's a particularly painful clause they're relating to insolvency. Something that we all should be looking out for, but the title insurance policy would cover. And if we looked into it, it would make the whole thing fall apart. So, but as you know, Dale, the title insurance policy has been around for years. And various iterations, certainly for as long as I've been in the market, and you too. So, lenders used to roll it out en masse, particularly sort of in the noughties, with the Lehman brands and the Merrill's brands. I mean, everything was tight.
Yeah.
And that made our life as lawyers relatively easy, made lenders' lives easy to get scale, difficult because they had to end up claiming on a lot of policies for risk, because corners do get cut. But in this market, I think it's managed in relation to fairly vanilla products, and I think that's the right way to go about it. There are some areas where I would go against title insurance policy, and I hold my hand up. I've acted for title insurers for as many years as I've acted for lenders. So it's not that I don't believe in the product, but if I'm acting for a borrower who's buying a house, I think as a buyer, certainly as my home, I would want to know certain things. I wouldn't want to be insured against certain things. I just want to know certain things. So I'm not sure it's wholly appropriate. And for HMOs, I'm also not sure it's wholly appropriate and effective. For HMOs, we actually have a bespoke insurance policy that covers certain HMO risks. The reason I say it's a broad generic policy doesn't work is because an HMO, when it's in breach, when there's a problem with it, is a continuing breach. It never ceases. It never has a sort of a finite moment, like when I build my conservatory, that's breached at that point. I built in 2005, and in 2005 my conservatory is in breach. With an HMO, if I continue to use it in breach of planning, every time I let it out, that is a new breach. And title insurance policies tend to work on the basis that the breach has existed for something like 12 months. And that's where they want to cover. So if I'm letting my HMO out illegally, then I'm always breaching it. Every day I wake up and take rent. And that's where I think that some of the title insurance will fall away. But there are other means of covering that, using that plaster for that risk.
Okay. So, I mean, breaches and things apart, I mean, are you seeing an increase in fraudulent activity in the current climates? Because everything obviously has gone onto the tech side. People are at home. A lot more, you know, there's probably a lot more ingenious ways of doing things now fraudulently than there probably was 6 months, 8 months, 12 months ago.
Yeah, I think, look, not for the mortgage transactional side. I think the traditional fraudulent activity of scamming and phishing, and certainly, you know, as a law firm, we are getting, you know, we get daily attacks, and you know, I'm sure lenders are no different. So it's about being vigilant on those necessary in relation rather than transactional fraud. Yeah. I mean, transactional fraud has always existed. Certainly, I've seen it in my career, you know, as much 10 years ago as I have today. The nature of it looks slightly different now, and as I say, it tends to be more email phishing and scam and phishing than before. But the transactional fraud used to be incredibly complex, and that hasn't changed. I think what we need to always be vigilant about, and I've got one front in my desk at the moment actually, which is continues to be new builds, continues to be overseas investors, continues to be the disparity in valuation between new build and a tested market, and I think that's just a really challenging area and always has been, and potentially always rife. But the one thing, Dale, that we as a firm are keeping an eye on is CBILS fraud and BIBLS fraud. And there are some lenders whose probably entire program at the moment is made up of CBILS loans, development lenders, bridge lenders, and you know, it's very difficult to imagine that 100% of the lending going on should be CBILS lending. And I think if I was going to keep an eye on behalf of a broker client, it would be to just keep in mind that your diligence on CBILS lending is really, really on the money. And I say that not just because whether or not fraud exists, but it is going to be something that is very thematic in the next 12 to 24 months. Government, and by proxy the population, is going to want to look back at how the government handouts have been used, and they are going to get really cheesed off if they find that their public money has been used improperly. And this applies to PLCs as much to borrowers and whatever, but I think that's going to be a real theme over the next 12, 24 months. It may even end up being an FCA thematic review. I mean, I'm talking far out of turn, but you can see how that might extend at some point. So if I was an intermediary, that'd be one area I would be looking at as well in relation.
So make sure you do your homework. Okay. And talking about intermediaries, you know, we're all working stupid hours. We're all working 10 times harder to earn the same pound that we were doing, you know, before COVID up to March, etc. I don't think it's sustainable, to be honest, but we'll see what happens. But you know, we're all working towards the stamp duty end at the end of March. Do you think it will be extended? Are you know, what's your advice for brokers at the moment when a new client comes on board and says, I want to beat the stamp duty deadline?
Yeah, I mean, stepping back one part, I had an interview on the radio this morning, actually, fun enough, from a Holocaust victim, and he said something that really poignant. He just said, look, a single flower is my garden, and the family is my world. And I think just stepping back from the nature of this interview a little bit, yeah, people are working really hard, but we really need to focus internally on ourselves as well. Yeah. And I think, you know, that really knocked me sick to the driver this morning, because I think it's just really, really important that we make sure that if there is going to be sustainability, there's got to be people sustain it, and we've got to be sustained. So I think that for me, that is sort of cuts through everything. Having said that, as far as stamp duty, look, we were already being asked by our lender clients to talk about capacity for March 21. So we are already planning for a very strong drive for that, as there was in 2015-16. So I think that's notwithstanding what may be happening in various regions in the country as to how lockdown has impacted the flow of work. I think there's going to be a general trend towards hitting for March. I think what we're saying to our lenders is that, you know, borrowers are going to have to engage a little bit earlier in the process, and that means that we are going to have a better chance to hit March 21. I think if you remember the last, you know, the stamp duty hike, you know, we were all getting instructions for 3 weeks ago, and it was possible to manage. So I think back to the relationships point, everyone needs to talk, keep talking. Brokers talk to your broker, to your clients, lenders talk to your brokers, solicitors talk, frankly, everyone they can, and just get everyone to hit earlier in the piece. I think there will continue to be activity. I think there will continue activity to March 2021. It may not be as exciting, but it will still be there. And the principal reason, I spoke to the chief executive of a lender, a resi lender last week, and he rightly said to me is look, you know, a lot of lenders, as you know, have completed securitization for the last 6 months. They've got cash, and there are a lot of investors and investment funds that are looking for yield. They're absolutely hunting for yield, and mortgages of whichever flavour bring yield. So I think that sort of macroeconomic point is just doesn't go away. There's cash there, and people want to invest in mortgages. So the question then comes, how does that flow through to the underlying borrower? And I think, yes, the borrowers may see a spike in up till March, but there will still be that interest there, and there will still be that cash to deploy, and it will still be relatively cheap. So I think a good deal is still a good deal. Yeah. And so I'm hoping that will still go through. I don't think the Chancellor extends stamp duty deadline, and the reason being is that this country is forever panicking about property bubbles, and this will be a forced property bubble. But then we've also got to bring into question that with furlough coming to an end, with more exposure in the economic uncertainty, affordability comes into play. You know, our borrower may see an opportunity, but can they convert it because the lender's now underwriting a little bit more cautious? So there's going to be this inherent conflict in what happens. I think the Chancellor will not want to make that bubble any bigger, because when it bursts, it's got to burst. And I think it's lance that oil. And I think, you know, you can start a recovery with a property-led recovery, but I think sustaining it hides a lot of bigger issues in the economy. And I think at some point we've got to get them out and exposed. And having property hide that, I think, doesn't do us any favours.
Okay. Conscious of time. One last question. You're a broker. There's 2 things you need to do next year. What are they?
I think monitor the market. And I think that means look at where products might move to. So, you know, we've spent the last 12-24 months looking at HMOs, multi-units, but I still think, for example, especially some of the tax benefits, holiday lets, short-term lets are an interesting area, and I don't think fully considered by lenders yet. So that might change in the next 12 months. I think look at I think there'll be a lot of restructuring and insolvency work, and I think as a consequence there will be some extending of the credit curve by some lenders. So look at you know, what we loosely used to call non-conforming, and look at those sort of areas. You know, the debt consolidation points. You know, that is going to be an obvious area of output for the next months. You know, I remember, I mean, in the bad old days of creating mortgage products around IVAs and the like. I'm hoping it's never going to go that way, but nonetheless, you know, our economy has always been in cycles, and so it is. You know, there are going to be lenders, and you're going to have borrowers that were affluent and asset and income rich last year who might not be next year.
Yeah.
So I think it's about monitoring your market and investing in yourself. Training absolutely key, and with training comes the confidence to deal with new and exciting areas.
Brilliant bit of advice to end on there. Julian, I really enjoyed that. Thank you very much for your time.
Welcome, Dan.
And thank you for watching. There will be more Impact Insights coming soon. As always, if you've got any questions or if you've got anybody that you want us to interview, please get in touch. In the meantime, keep well and stay safe.